What's up, guys? This is Carter Thomas with Coin Mastery TV. Happy Monday. Quick announcement for you. My buddies Chris and Rocky are doing a live technical analysis class tomorrow. I know I'm really interested in this stuff. I've been following Chris for a long time. You should go sign up at coinmastery.com/live, Live, and go watch the live training. You'll learn a lot. They're really smart dudes. Chris is one of the guys who got me into crypto, or trading crypto, I should say, a couple years ago. So I would encourage you to go check it out. If they will have, a course at the end, if you decide to enroll, I get a small commission, full transparency, obviously. But it's really good, and many people from Coin Mastery have signed up, and they really enjoy it. And they got a great chat room and ongoing training. So go check it out. It's live tomorrow, I think at 2 p.m. Eastern, coinmastery.com/live. At the very least, to get a bunch of really good free info. So, cool. Well, it's Monday. If you guys checked it out yesterday, we did a special Sunday live stream. And today, we're continuing our charge through the doldrums of the bear sideways action and hopefully on our way back up to the top. Now, I'm kind of zoomed in here on the 30-minute on Bitcoin, but we're talking a lot about macro. We're talking a lot about what's going on in the overall market. I think that's going to be the big story over the next couple of weeks. Is there's going to be some shifts, some news, some things that happen that really move money across asset classes. I don't know exactly what the catalyst is going to be. I don't know whether it's going to be up or down. Based on the pent up mood and the sentiment of what I'm seeing across all the networks and across all the news channels and a little bit in the charts, I think that that's really interesting. And so the big game is watching as much as I can on the macro side, staying patient on the micro, which is the actual what time or what I do to purchase, and then being very deliberate about the next moves that I do make, so that as the momentum builds, it will build fast, and you just want to be prepared no matter which direction it goes in. So when we're looking at Bitcoin, excuse me, we're watching it continue this sideways pattern. Now, the good news is over the last 24 hours or so, we're starting to see this volume increase a bit, and that is always a good sign. So whenever you're seeing the volume come up and you're seeing the price go up, that's just a good thing to see, especially on the weekends after the Dow Jones and everything else had a tumultuous week, right? In the grand scheme of things, the stock market's gone up like 300% and is down 5%. So it's not they're still way, way up. But there is new money coming in, or at least new activity coming in, which is driving the price of Bitcoin up and a few other asset classes. So this is starting to get interesting, but I think we still have a few more resistance points that we want to get through, right? 94, 9,500 is, in my opinion, a pretty big deal. Even the 9,000 is a big deal, which we didn't get through last time. So we get through 9,000, we get through 9,500. It starts to get a lot more interesting once we get through 11,500-ish area. We're in good shape. All right? That's like that's really good news. Whereas 9,000, 9,500, it kind of graduates. It goes, okay news, better news, really good news, and you can make your decisions accordingly. What I will probably do if it crosses this 9,000 for Bitcoin, and then you can look at Ethereum and Litecoin as in the relative ways for their support levels or resistance levels to break through. I will start layering in some bids, and then I'll have really, really quick stop losses associated with that. Meaning I won't put a lot of money out there, and I'll have pretty tight stop losses, and if they hit, whatever. But that's a good way to mitigate your risk as you go up. If you are not a trader, if you don't know how to do that, don't worry about it. Just keep the dollar cost averaging in, right? Just keep your cycle going, and then when you're ready to increase that amount, you go for it. So that's what's happening with Bitcoin, and the same thing is going to be true with Ethereum and Litecoin. Those are the coins that, all three of these I'm excited about and entry points, and then I can start looking at altcoins. But because Bitcoin especially dictates the market, that tends to be the entry point. Some people can focus on 50 things at once. I'm much better when I just focus on one or two things at a time. And so that's why. Now we're looking over at the market cap. And what's interesting is that we did see a slight, or an increase in volume, I should say. But the market cap has not been a huge change. Meaning we're seeing the volume spike. This has not necessarily spiked quite as much. I mean, even the price is going up, but the overall market cap is hovering back and forth, meaning a lot of that volume is buying and selling, but a lot of that money is just going into Bitcoin. It's not necessarily going into other stuff. So that just means, in my opinion, that there's new money entering the market, but it's more of a one-to-one. It's not one of these things where there's 9 trades and you can get $1. It can boost the market cap $4 or $5. So overall, it's a strengthening sign for the market. Not necessarily confirmation yet, but it is a good sign for the overall strength of what we're at right now. So that's the big takeaway. It's looking good. I mean, I like it. Bitcoin's starting to hold its own on the dominance. I saw someone tweet earlier about the difficulty of Bitcoin mining, which I always think is a really interesting metric as somebody who's not doing mining or not really into mining. I always try to keep those metrics in my, in the world of stuff that I try to absorb, because you don't know what you don't know. And as long as you just have those data points, the better. So we're in a good position. Like I said, if we keep this up around 9,000, maybe start to layer in some bids, 9,500, layer in some more bids, all with tight stop losses. We get to 11,500 with some good volume. It may be party time. So we'll cross that bridge when we get to it. Over on altcoins, I think we're seeing the same sort of up and down story as people gain confidence in the market as related to Bitcoin. You see altcoins swing, and there's no surprises here. You see the ones that are most volatile are the ones that rose the fastest, dropped the fastest, and vice versa. I think one thing that's really interesting, one takeaway I saw was that Red Pulse was listed yesterday, and I don't think I own any Red Pulse. If I do, it's a very small amount. But when you look at what happened, let me go to 30 minutes. That should probably be the best chart, maybe 15. Traditionally, when a coin, so Red Pulse was originally listed on KuCoin, it had a huge run up, down, and then it got listed on Binance. And what happened was when the announcement came that it was listed on Binance, there was a huge run up on KuCoin, and then it got listed on Binance and actually started trading. And you could see what happened. The price just kind of trickled down. The volume is there. And I think that this is an indicator of a bigger thing that's happening, which is over the next 12 months. I mean, even over the next 6 months, we're already starting to see it. Relying on this exchange arbitrage is not necessarily a winning strategy over and over. It can happen for sure, but I think that it's actually going to work itself out so that coins that don't have all the hype, that don't have everybody waiting for it, end up getting the pumps on the market and not before. So when you look at a hype cycle for any sort of product launch, and this comes from launching products, this comes from being a part of product launches, which is essentially what crypto is in a lot of ways. It's just like a series of product launches. You can build your hype at different points throughout the cycle. And I think that from my perspective, from a macro standpoint, I think that cryptocurrencies built in speculative markets that are not necessarily built on fundamentals the way that, let's say, a tech startup or an equity would be, you really get one shot at going big, in my opinion, unless you have some real horsepower behind you, which many coins do. Meaning, you can go big on the pre-launch, you can go big on the ICO, you can go big on the exchange launch, or you can go big post-exchange launch. And it's kind of a game of chess on which one is the right timing. And a lot of that comes down to the overall timing of the market. A lot of that comes down to the brand and the community and everything you got going into it. But I personally think that a lot of the things that are getting hyped like crazy before they hit the markets, it's hard to sustain that hype for a long enough period when there's so many new products coming out at the same time, when there's so many new variables with crypto, with the greater market. And so I think, at least for me, this is just my own opinion, I'm really interested in companies that don't necessarily hype like the pre-sale or the ICO or the airdrop or the anything. What they wait for it to get listed, they kind of keep a low profile, and then they start hyping it, or at least not even hyping it, just marketing it, just letting people know, so that when you do get that one big run, which inevitably altcoins get, it's when it's already trading on a market. And so for you guys, that's one thing you can really keep an eye on, is what are the coins that are coming through that are doing a really, really great job, but aren't trying to be super flashy about it, because that way a lot of the value is preserved by the time it hits the market. And that's when, in a liquid market, when it still has all that pent up potential, you can do well. Again, this is an observation. This is just from I've seen so many products get launched. I've also seen so many coins get launched in the last year and a half. That's just the trend that I think is going to happen. That's the kind of move that I'm going to make. So we'll see what happens with, exchanges like Binance and, KuCoin to a certain extent. Binance is really the big one, Bittrex to a certain extent. But when do they use up their hype karma, or whatever you want to call it? And I think that if you start to notice that, you'll see what I'm talking about. Now, our trusty friend, the Nasdaq. Again, I'm only doing the Nasdaq because the Dow Jones and the S&P 500, for some reason, the volume, it's like big bars. It's like a block. So I don't know why. But we're looking at Nasdaq, which essentially mirrors the other two. It's mostly tech stocks. We're seeing a nice bounce back on the tech side, or on the equities market side. Now we'll see how this holds up. We've seen this bounce before, and then we'll see the volatility over the coming days, as we saw. Friday was kind of a good example. And so we're just going to keep an eye on this, keep an eye on the commentary, and right. If you guys didn't see yesterday on the live stream, we talked about JP Morgan. If you're interested, go follow Zero Hedge on Twitter. They always have the kind of the all caps breaking news stuff. But they released a statement from JP Morgan that says that hey, cryptocurrency might actually be around, might not be going away, and it actually may become a viable asset class that pulls money out of the bond market and other things, which are, bond market is really kind of a mess at this point, pensions and all that. So, it's apples and oranges, so to speak. But the fact that they're even talking about it that way, really interesting. And that's going to be in my opinion, that's going to be the story of cryptocurrency. Specifically, how does crypto start to get branded by the big, by the institutions, by the outsiders, by the people that really need to pull back and say, well, maybe not. They're never going to say that they're wrong. They're just going to say that things have changed. That's how it works, right? PR department. So we're going to keep an eye on this. Always want to be just monitoring this, draw conclusions from this, and watch the currencies, or watch the asset classes change, watch the branding change, watch the stories change. Remember, it's all about the story. Story sells. Story is everything when it comes to this stuff. It doesn't matter if it's speculative like crypto or if it's built on, air quotes, earnings reports. It's all a story. It's what do you believe the future is going to look like? And anyway, so we'll watch that. Great couple posts, or one great post. Obviously, Ray Dalio, terrific investor, one of the most successful hedge fund managers of all time, and he wrote a really good post. I'll link this up. He writes on LinkedIn for some reason, and he talks about where we are in this cycle. If you've never seen his video on how the economic machine works, you should go check that out. Just go to YouTube, How the Economic Machine Works, Ray Dalio. Awesome 30-minute video. And he talks a lot about how credit and debt cycles work on the long term and on the short term. This article explains it well. If you want the Cliffs Notes version of this, he's basically saying that we are really starting to push the limits on what the economy can handle. And the two things that are really stressing it are, one is the inequality, which we touched on last week, where the haves and the have-nots, as he talks about, it's getting bigger and bigger. And the other just being the way that the Federal Reserve and the government, the quantitative easing, meaning like how much money they're issuing, how that's really stressing the economy with the new spending and the new, inflation and just all this stuff. And it's probably going to go on longer than people think, as things always do. But the stress is coming, right? And the inequality is growing, and it's just an interesting perspective. The guy is so smart. He's such a good investor. He's such good decision process. That I would encourage you to check this out and to read it. And these aren't the kind of things that it's worth not skimming. I'll say that. So go check it out. He's just a really smart guy. Along those same lines, I'm always a little skeptical of articles like this, right? But this came up in my newsfeed. It was written maybe 2 weeks ago, but I think it dovetails into this idea of this short-term debt cycle, the credit debt cycle. It's saying 1 in 6 millennials have 100,000 in savings, which I actually thought that was a kind of a lot, to be perfectly honest. And especially when there's so many people in America who, I think it's like 50% of people don't even have maybe $1,000 in their bank account saved up. And I think that this is macro information that's really helpful to determine the psyche of who's getting into crypto. So we always come back, right? The macro meets the micro. We come back and we look at how this volume on the chart is working out. It comes down to, let's say, 1 million individuals all making collective decisions based on their own self-interest. And that all gets baked into the decision of, hey, I should buy some Bitcoin or Ethereum or whatever. More importantly, I shouldn't buy Nasdaq, Dow Jones, index funds, General Electric, Tesla, whatever, right? It's all about what those decisions are. And so studying this demographic information, in my opinion, is really helpful whenever you're looking at transition phases. And that is what this is all about. We had a huge price transition last year. We're going to have another one at some point. But now we're looking at the more at the transition of people starting to change their belief systems, to change their actual asset allocations. And as millennials experience potentially the same inequality and also the same set of belief shifts, how are they going to put their money in? And I mean, the data would tell you that crypto is huge with millennials. I mean, obviously, that's just everyone kind of knows that. But watching this information is really, really, really important, as they are the one, because a lot of them are going to the big companies that are making all the money in the market. You go and you look in the Nasdaq, you look at the top 50 companies on the Nasdaq. Millennials are the ones that are really working there and building these companies and going to be receiving a lot of that money. If they're the ones who are really interested in crypto, that gets interesting very quickly. All right. So I thought that was really cool. I opened up CoinDesk, and I always up CoinDesk and Cointelegraph. There's not really any news. I think it doesn't really help you guys if I just sit here and tell you what happened in the world from a making decision standpoint, unless there's something that you can take away from it. The only thing I will tell you, I do not know anything about this ICO. I've not looked into it. I saw a few people talking about it on Twitter. If you don't know what dark pools are, you should go read the book Flash Boys by Michael Lewis. He's an awesome author. He's it's like entertaining, but it's nonfiction. He wrote Moneyball, if you guys ever seen that movie. He's wrote Liar's Poker, which is an incredible book. If you ever want to read those books, go to coinmastery.com/store. Keep an updated book list there. But if you don't know what dark pools are, it's essentially an OTC area. Not OTC. It's kind of like a private trading pool that doesn't necessarily go onto a market. It's just done between trading desks. Maybe that's done with an investment bank or just a trading house or something like that. And from what I understand, this new ICO wants to build a dark pool for crypto because there's a lot of slippage in the markets of crypto. Meaning, if you wanted to go buy $7 million worth of Bitcoin tomorrow, you would probably move the price. Similarly, you go to any other crypto outside, like that doesn't have the sort of liquidity. You go into let's say you wanted to buy $100 million worth of Dash. You couldn't do that without there'd be huge liquidity problems. And finding those OTC deals can be difficult. So these dark pools create kind of sub-markets that happen with algorithmic trading, but it's not necessarily done on a marketplace. Now, the upside is that it can move a lot more money, so to speak, by creating these secondary markets. But the downside is that when you hook into the markets, they can often manipulate the price too. So you can see what the price is trading at, underbid it. I mean, there's a lot that goes on. I would encourage you to go read Flash Boys as high frequency trading gets in here. The big takeaway for me, what I'm going to do, or what I'm going to start thinking about a lot more. Remember last year when everyone was like, oh, futures, man, the futures are going to bring in so much institutional money. It's going to be such a great thing. I can't wait. We're all going to be millionaires. And guess what? Futures did come. And guess what? They actually did what they were trying to do, which is manipulate the price to a certain extent. That was one of many factors, right? It didn't play out the way we wanted to. The traders and the money of the futures crowd, they did their thing, as you'd expect them to do. As hedge funds, as investment banks, as trading desks, as private equity companies, as institutional money comes in, they are not just going to come in and play the same way we play. They're going to come in with all guns blazing, with all their tech, with all their high frequency stuff, with all the exchange manipulation tactics they can possibly do to make it the same game that's happening on finance. That doesn't necessarily mean any of us are going to lose. We still have a long time until this happens. But you need to be aware that they are going to come, but they're not going to necessarily come with just their checkbooks. They're coming with all of their arsenal to win. They are competitors. And so what that means for all of us is that we need to start thinking about this like a competition as well. How do you get a competitive advantage? One of the best ways to do that is just buy and hold, and just the coins are the best. But you can get it from information advantages, by networking, by finding out really good things. You can get it by research, by analytical advantages, things like that. But I would encourage everybody to answer one question. What is your competitive advantage in crypto personally? What can you do way better or way more than a lot of other people? And if you don't have something, you need to have that thing, or you need to put your money in dollar cost average, maybe buy some dips, and step back and let the market do its thing. Do not try to get involved. You have to realize that this is a competition. This is not a thing that we are going to enter that phase in the next 6 to 12 months. And I'm talking about this now because this isn't a bad thing. As it gets more competitive, more money comes in. And if you're at the top of that competition, you're going to make a ton of money. Just start thinking about that. How can you get competitive? How can you get better? One way, get really good at research. 2, learn how to do technical analysis. I mean, go sign up for the free webinar tomorrow. There's just so many things you can do. But that is this is going to be a big deal. The futures market was a taste of that. We're just going to watch this happen. All right. I got to run. I got to go catch a plane. Sign up for the webinar tomorrow, coinmastery.com/live. It's worth it. It's free. You don't have to sign up for anything. If you do, terrific. Great guys. In the meantime, I will catch you guys tomorrow. Good to be back. It's great to see you. All right. Peace out, guys.